Morning all. Excuse me. God, this cough's never going to go. How are we all doing? Happy Friday. Finally. Morning, Peter, Ian, Martin, JC, Danny, Joe, Amy, JC. A strong beat 3-bar reversal on the NAS to break the highs yesterday on the hourly chart. I'll have a look at that in a minute. Morning, Gregors. Morning, Novelty. Morning, Day Trader. Let's start off with having a look at the US indices. A quick recap of yesterday while we're talking about the NAS. Morning, Evans. So I managed to squeeze. Yesterday was a triple hedge again. We've had a few triple hedges. Jesus, look at these indices this morning. What the hell? Wow. They're off this morning, aren't they? Somebody decided they wanted to buy some stock this morning. So we had triple hedge yesterday again. Managed to squeeze 0.37% out of it. Not a lot, obviously. But not very easy yesterday. So NASDAQ on the hourly, 3-bar reversal, yeah. So nice 3-bar reversal there. Where's my pen gone? So big, strong push down. Rejection from the sellers. Buyers took back control. Off we go. So very, very reliable candlestick pattern, the 3-bar reversal. That one's not really very 3-bar reversal-y, but that pattern, if you see that pattern anywhere, literally it's almost anywhere. But ideally, when you get to the end of a downward move, this one is in the middle of an upward move, but it's basically an indication of very either big profit taking from the buyers or a large attempt to drop price by the sellers, which basically fails. And then the buyers take back control and off you go. So it's a very good pattern. Doesn't appear that often, but when it does appear, it's very reliable. It's one of the most reliable candlesticks patterns. That's why I talk about it all the time. It's one of the most reliable candlestick patterns I ever discovered. Well, I didn't really discover it. It's just, one of those things. But there's another one there. Look, 3-bar reversal, inverse, push up, rejection, push down, continuation. That one didn't continue, but you will always get, most of the time, you will always get a move off the back of it. Enough to make money, basically. So yeah, NASDAQ yesterday, just about to see that, can't you? Excuse me. So hedged. So we broke long, flip-flopped around, came down, just about tagged me into a hedge, sat around again for ages, decided we were going to go for a run, then decided we weren't. Then we pushed up again. I hit the target, basically. So on the NAS, where are we? I just basically decided to get out on, it was the monthly high. So this was where I had my initial TPs set. Just under this monthly high. I saw this double wick rejection on the NAS here. So my target was pretty much there or just below, somewhere around there. And price basically pushed up and I was like, this is going to hit target. Fantastic. We're going to bounce off the monthly high, which is the target I set in the live room. And then it pulled back and then it pushed up again. It tweezer topped, pulled back into basically a shooting star. And as soon as I saw that starting to sell off, I exited those longs because I was just like, you're not going to run away with me not having that target hit. So I got out there, exited on the aggressive exit. So usual stuff. The Dow, I'll come back to that one in a minute because that was complicated. The S&P, textbook, triple top. This one I was looking for a target higher up, but it just did not go anywhere. There was no momentum yesterday on the S&P. We got hedged and it literally didn't go anywhere. It pushed up into this high, rejected, pushed up into this high. Again, not a very clean 3-bar reversal, but it pushed, rejected at that high twice, came down. I was like, screw this. I'm getting out with virtually no money. The advantage of getting out with virtually no money means that the aggressive exit virtually needs no distance to get you out because it gets you out basically at break even. So I think I made $10 or something ridiculous. I posted in the Telegram group. And the Dow was a pain in the backside. So the Dow yesterday, very much the same as the S&P, opened, went absolutely nowhere. Then it took off at the end of the day. So it literally took forever to go anywhere. So I exited as we basically put this triple bottom in. So we came back down, we pushed up, couldn't get anywhere. We pushed up, made a slightly higher high. I thought there's a good chance we're going to test this high. Came down, broke that low, pushed, and I thought, screw it, let's have a go. And I wanted to get out at that high. As you can see, I got out there. And that was about a $20 loss. I just wanted out. Done. It's just one of those days. I said yesterday when we left the live room, it's just one of those days you just got to go, this is not tradable today, walk away. So scraped minute profit out of it. So that was US indices. DAX and Dow yesterday, 0.5% banked. Basically, FTSE was a beautiful trade yesterday. You can see the FTSE trade there. Clean break, double profit. Hedged on the DAX, couldn't make anything with the DAX, gave up with the DAX, just closed it out, closed the hedge out at a loss. That paid for that plus $100 or something. So this morning we've had retail sales for the pound. We've got 2 minutes. Massive miss. We knew that it was going to come down. Christmas this year wasn't good for retail. We knew that. There was a lot of stuff on the news about it. But they were expecting it to drop by 2%. It's dropped by 5 and a bit. It's a huge miss. It's huge. So big move down on the pound this morning, obviously. That obviously means inverse index. So big rally on the indices. The DAX has obviously had a boost off of that as well. The DAX moves quite often with the FTSE. If they're buying a load of stock sectors in this because they're liquidating cash, they'll buy stock in the DAX as well at the same time. So bit of a rally. We'll see where we go. We're nowhere near ADR on it. It's just a news spike. So should trade as normal. We've got a very, very, very tight pre-market range, though, on the FTSE today. So I'm not sure we're necessarily going to get a pre-market break on this today. We should be right in the DAX, but this, I don't know. We'll see. The EA will do all the calculations. That's why I use an EA, so I don't have to do it. But we'll see what happens with that. We've got 26 seconds to go. Only other news we've got Lagarde speaking again today. She's been speaking every day this week, Lagarde. They love Lagarde. So she's speaking again today at 10 o'clock this morning. So 2 hours after market open, last day of the Davos conference. We've got retail sales for the Canadian dollar, pre-market, and then post-market. We've got University of Michigan. Hopefully the market won't hang around for it. Sometimes it does. So we'll have to see what the open's like. But it's not major news, but the market does tend to react to it, unfortunately. Did get pre-market on the FTSE. Oh, Christ, it's a short. Short on the DAX as well. I'd rather not be short, considering the market's been massively bullish pre-market, but what can you do? Excuse me. Sorry, I was just doing something else over there. I saw I was miles away. Hedged on the FTSE. Clean break on the DAX. Clean break so far on the DAX, but I'm not holding on much hope for this today. So FTSE, let's have a look at where we're going. I do two things at once. I'm male. I can't multitask, obviously. FTSE upside is very tricky today. We've got this accumulation block here, which is 125 ADR. Other than that, we've got the open from Wednesday, which is probably the most logical target to go for, which is obviously previous day's high. That's just under ADR. The thing is, I've got a feeling this pound might collapse today. Remember I said this news event on Wednesday was rubbish and it's highly unlikely that is actually a move, and I was expecting them to come back and return to source. That is what looks like is happening. Hasn't come back quite as I was expecting it to, but it is coming back there. So but this is a big miss for retail, and the fact that also this stuff going on that might affect inflation is happening. I've got a feeling we might get a bigger move on this pound today. My TP's there on the pound odd, for example, but I got a feeling this is going to run today. And if it does run, obviously the FTSE is also going to run. So if we're going to get some ADR hits on the pound, we're likely to get some ADR hits on the FTSE as well. So we'll see what happens, but we need to go with momentum. But there's two targets to the upside that I can see, which are obvious. One being open from Wednesday, which is basically the close from Tuesday. However, this is all broker data. So we actually opened down there. So this is actually a whacking great gap. So it basically would be a gap fill and run. So I think what I'm going to do is I'm going to move my target down to ADR today from 125 for the hedge to the north and put it just under the high. That would be just under 3R. Yeah, basically just about 3R-ish, something like that. Downside, yeah, I mean, these lows here are very supportive. We tested that for 6 hours and didn't get back through it. It's this level here, look. So we basically came up and hit this level, hit it, broke it, supported. So that's a good strong buy sell level there. So I would expect we'll probably support that. So I'm just going to move the downside target up slightly, which is just shy of 5R to the downside. So that's the hedge on the FTSE. DAX. Are we ever going to get a clean break this week? Have we had one this week? Yeah, we had the FTSE yesterday, didn't we? Feels like this week has just been Hedge City, isn't it? Considering it's been Hedge City, I'm pretty happy with a break-even week, which is what I'm on target for at the moment. Bloody nightmare. Anyway, DAX is dead. Look at it, inside bar on the pre-market range. Well, no, it's not an inside bar. It has actually broken short, but market's dead. Hopefully we're not waiting for Lagarde, surely. We are. It's 2 hours of pain. Overnight news, not an awful lot. So the retail sales obviously was your main overnight news, which tanked the pound. There wasn't much else I could see overnight. CPI ticked up ever so slightly on the yen for the Japanese. So the core year on year is as forecast, a 2.3. So it has come down. So the core has come down. We were forecasting a 2.5 to come down. We got a 2.6. So it has come down, which is good. So what they're looking to do, the Japanese, is return inflation back to 2%, which is the worldwide target. It's what everybody wants, so that they can bring their interest rates back up to zero. And this is another confirmation that they are very much on track to achieve that. They're 0.3 off. So I think this is still quite bullish for the yen. Even though the numbers basically are ever such a slight tick up, I think that will help the yen moving forward. So other than that, not an awful lot. We had Bostic speaking last night, open to starting rate cuts before July if there is convincing evidence that inflation is slowing. So yeah, it's the same old stuff, isn't it? If inflation is coming down and the rate of drop is slowing, I am happy to do that. If not, we're going to not do that. We're going to do that. It's just, we know that. Give us something else. Anyway, so that's your news. Right, DAX, you are on fire today, aren't you? Dead. Let's look at FX. Morning, everybody else. Haven't said morning to Sarah, Evil, James, Virginia, Antonios, Calimera. Don't know what that means, but I'm assuming it means hello. Calimera. Is that Greek? Look it up. Greek. Get in. Morning, Kennelly. Morning, Astro. Right, FX. So, excuse me. Drawdown control. Start off with drawdown control with H1M5. Pound yen, the aggressive entry that I took on Wednesday stopped out yesterday. We did start to get that move underway, but they bought back out of this accumulation for a new leg. So nothing I can do about that. So I had to take the hit on that, which was just over 0.5%. Obviously, with the news coming this morning, I put the aggressive back on again. EA took another position yesterday as well, so scaling in as normal. But I took another aggressive this morning prior to the news. So basically, this candle on the hourly chart here on the pound yen, where's my entry there? So this candle was looking basically like that when I placed a pending order. So this was a pure news play, basically. I was going, right, if the news is crap, pound's coming down. If the pound's coming down, I'm putting a pending order underneath the hourly low and pop, in we go. So that's basically that entry there, which is obviously now in profit, which is great. So we've had the reversal alert on the hourly. We know obviously we got a weak pound. I'm hoping that we might get a little bit of yen strength off the back of that CPI number. US yen coming down. New Zealand yen not doing a lot. Euro yen coming down. So yeah, we've got some strength off the back of CPI with the yen, which is good. So that's going to help with this. So I'm going to put a very small risk stop on that, which is going to be like $150. It's about 1/3%. And I will trail that down basically to break even. So with aggressive drawdown control positions, I'm always looking to get them to a break-even position as soon as possible because they're large risk. They're normal stop-loss positions. You know what happens with stop-losses. So if we can get an ADR hit today and get back down and retest those lows, I will break even that. If we can push up, the ideal for me today would be for this pound to have a little bit of a recovery during the London session and bring us back up into retest of that area so we can see that the sellers really are on this in New York. That would be perfect. And if we can get that move and break back down below that low, that will just come down, protect that, and then off we go. So ADR is 125 for my average. It was 225. So you can see the power of aggressive drawdown control. This morning, my average was here. Yeah, so I had to go beyond the propulsion gap to actually even get a break even. And that is including stops. That's my average price. Sorry, swaps. That's my average price. I'm about $350 in swaps on it as well. So that has moved my average up 1 ADR. That's why we use aggressive drawdown control. When you're getting into positions that are going wrong too fast, that gets you out of them quick. So a 150 ADR move today, done. I won't be done, actually. What I'm going to do is I'm going to use that to do aggressive drawdown control and obviously start shutting the positions down. I won't get out because I still think the yen's powering up. So yeah, so that's all I did yesterday on that one. The ADR reversals banked 0.23% yesterday. It's just, I really am struggling to bank at the moment. This month is not flowing at all. It seems very stop-start. Sideways, massive move. Sideways, massive move. It's just not conducive to normal position trading because we're not using market structure properly. We are literally just going and sitting around, and you can't bank. You bank on that. We're not getting that at the moment. So we're just waiting for the market to get some flow going, which it seems to be doing this morning. So hopefully I'll be able to bank a bit more. With the ADR reversals, I'm looking basically for 0.25%. So anything that gets to 0.25%, I'm looking to bank it. It's nothing is in drawdown of any worrying. Everything's like 1% of drawdown. It's just normal positions. So pound yen's 1.28. That's the worst one at the moment. So it's not. There's nothing worrying me. It's just it looks like a big number because I've got a lot of exposure, but we're just waiting for something to move. So I'll be banking stuff today. I may even be getting out of some of this today. Depends on how strong that pound drop is if it happens. Hedging managed to close out 0.39% yesterday. Closed out 0.32 so far this morning. What have I closed out today? Did I close that out? Oh no, TP, Aussie dollar yen. So that's a TP hit. There you go. There's the hedge. H1 reversal alert short, out at propulsion. H1 reversal alert long, out at resistance. Just about to get in short again. And already have one on short as well. When did that go short? Oh yeah, there yesterday. So I took a short on it yesterday and it rallied. So second short's about to go in there. Half an ADR. 54, perfect. Yeah, so second entry about to trigger in the next 45 minutes. Average up to there. Targets will go down to the lows. So I'm just going to move target back down to the lows, which is top of that propulsion. So when that second entry goes on, that target will also go down to there. The average will be up there and that'll be the exit. Sorry. I hope this cough isn't a 100-day cough. It's going to be bloody annoying. Morning, Potgoater. Right, so let's look at ADRs today. Only one so far, Aussie dollar, New Zealand dollar. So this is just about an ADR hit. That's the swap candle. So you can see how much movement there is there at swap. So whether or not that is actually price action, it's 10 pips. I don't know. But we have exceeded the market by 6. So if it's not ADR, it's like 4 pips shy of ADR if you get rid of the candle at the swap where the brokers have been doing their usual let's kill everybody move. So nice big strong move up there. Reversal alert has just gone in on M5 this morning on that one. So it's more of an accumulation at the moment. It is dropping nicely. So there's your reversal. Sellers got back on board. Buyers had 3 attempts to rally it, failed. So that was your entry, short target. If you're trading 100 ADRs, I'm trading 125s. But if you're getting an ADR, watch this high from yesterday. And there's a propulsion move there, potentially for downside targets. But that's the only ADR we've got today. Nothing else at the moment. I'm expecting some of these pounds to light up. Pound yen and pound New Zealand are getting closest at the moment. But not quite. So pound New Zealand, nice reversal there. That's a level we looked at. Didn't respect it, but that was that level I put on there, which was kind of roughly somewhere around this area we just kept bouncing around at. So it's just this whole kind of zone here, if you like, is where we've sort of been chopping around. That's putting down because of the news. It's nothing to do with the resistance. So it's a bit of a dubious one anyway. So looking for a reversal on that one today and potential drop. So we'll see what the market makes of this pound move and see if they continue to rally it. They certainly are with the FTSE. Look at the DAX. So if you take that wick out of the equation, we've got an inside bar followed by an inside bar followed by ever such a slight bear move, but half of the volume of the previous move, followed by I can't be asked. Good luck to us today. FTSE's just tapped into the previous month's level. That's 2-month high. Not real. It's not a bad level, actually. We've had a lot of reaction around that level last month, but I wouldn't exactly class that as really valid anymore. Okay, well, we'll come back to the DAX later because that's just dead. So we've got this area here. We've pushed up into, rejected, pushed up into, rejected, pushed up into, finally broke through it. We came back when using this zone as support as well now. So this might push back down into that propulsion gap. If we can get back down into this high from yesterday, before the rally started, that's basically TP1. That would be good. Looking like it might do an inside bar. It seems to be the story at the moment, doesn't it? We're getting a lot of this. Let's look at yesterday. Yeah, we sat around yesterday for 6 hours. Literally going nowhere. Look at the bodies on the candles and look at the wicks. It was just unbelievably impossible to trade it. We seem to be doing this at the open at the moment. It really feels like, well, I said to my wife last night, she said, is the news going to affect the, what was the news we were talking about? I can't remember. Something we were watching the news basically, and she said, is that going to affect the markets? So I went, nothing's affecting the markets at the moment. It's literally like we're sitting there waiting for somebody to say something that is going to make it explode. And it's just not happening. It's like the calm before the storm. It feels weird. I've not had this feeling before. The whole of December, most of January so far, and the indices as well. It's just, you feel like something's coming, but can't put my finger on what it is. So we'll find out, I guess. So weekly ranges we covered yesterday. These were all hit yesterday, these weeklies. We covered all of those. They're all good opportunities for mean reversions. So things like the Euro odd. Weekly was started on, where are we? Friday, Thursday, Wednesday, Tuesday, Monday. Yeah, so these are the weekly range hits and the mean reversions on those weekly range hits all underway. Euro New Zealand. That's still going actually this morning. So possibly the final rally there. If that pushes back down into that propulsion gap, that's probably going to come back down and retest. Pound New Zealand, we know about doing the same thing. So looking for those mean reversion moves. No profit takes on these so far this week. So we're looking for pullbacks on all those weeklies. We have got some monthlies as well. That pound yen, 125% of its monthly range. Massive extension on that. So hopefully this is start of the drop. RSIs, all the same. Pretty much everything that we looked at yesterday from the 4-hour perspective is still extended. Aussie New Zealand, huge move on the 4-hour, on the hourly there over the last 2 days. So that's a nice big 4-hour extension straight up. Lots of relative strength on that. We managed to break out of all the monthly highs. We've got another area coming up here, which is going to act as resistance above that propulsion gap. So it would actually be a lot nicer if this thing can push up into 150 ADR today, maybe even 175. I'm not sure it's going to get the legs to get there, but if it can get up into those levels, that's going to be a lovely short out of that. It's going to be akin to probably that sort of move. But propulsion gap targets to the downside galore. Not actually that extended, but it's the speed it got there. Remember, I keep saying about the elastic band theory that I teach in the bootcamp. It's about how fast it gets extended, not about necessarily how far it stretches. It needs to stretch, but distance isn't as important as how quick it gets there. If something gets stretched by doing that, banks and institutions have been taking profit along the way on the move. There's no reason for them to go quick profit take. When you get stretched like this, if this thing does that and gets up to 175 by the end of today, they are long as you like. first person to hit the sell button with any large order on that is going to scare the crap out of everybody else, and they're all going to hit the sell button at the same time. This is why we get those A-shaped recoveries, V-shaped recoveries, 50% retracements, because everybody panic sells. That panic buy came down really fast. Panic buy, 50% of the move. Just the way it works. So that's extended on the hourly as well. Not quite 75. If it got up to 125 ADR today, I'd have been in that, but didn't quite get there. CAD Swiss, nice big extension on that one on the hourly as well, but only just embedded from yesterday. This one's got stuck. This Swiss franc at the moment, we've got the whole week, basically, last 3 days, as you can see, the Swiss franc's been very, very weak. I'm really not sure why. There's no reason fundamentally for any Swiss franc weakness. We had Jordan speaking yesterday, every opportunity to rally the Swissy, didn't happen. Typically when we get any kind of conflict bubbling, the Swissy powers up. We've got conflicts bubbling and it's weakening. So I'm not quite sure why. It seems to me that it's just normal movement. PPI is down on the Swiss, which would indicate CPI drop. So it might be that the market's anticipating that interest rate coming down, which is why we're getting a little bit of weakness on it. But I don't know. So that's extended to the upside. But as I say, the Swissy, got to be a little bit careful with it. When the Swissy dies, it dies. When it rallies, it goes nuts. So it's one of those currencies that just gets pumped into and pulled out of very, very quick. And then it just sticks and does nothing. So you get pushed around by the CAD. So if we get big numbers on the University of Michigan this afternoon, and we get a big drop on the US dollar, for example, we're going to get a big drop on the CAD. That will come down fast because the Swiss is neutral, and it will just drop very fast. So, so those are your hourlies. 4 hourlies, CAD Swiss, Aussie New Zealand. It's all the yen pairs. CAD yen, all extended on the 4 hours. We got nice move up above the 75 level now. So we're getting the pullbacks off of the RSI extensions quite nicely. So that one, again, looking at that level on a retracement of that move. If it's going to continue up, that's what it will do. Otherwise, whatever, down. We got Euro Yen extended 4 hour. Very much similar to the other one. So, I mean, that one, we got a nice divergence on that, actually. Look, so we got higher high on price, lower high on RSI. That's bearish divergence. Looking for a pushback down into there. That propulsion gap's done. Those levels I'd be looking for some kind of support out of. We've got pound yen we know about, already. That's coming off of the monthly high. So good chance that's going to drop quite hard today. And US dollar yen. That one as well. I didn't take an aggressive on that. Probably ripe for one. I just wanted to wait to see what the UOM figures were later, see if we can get some negative numbers and just bring this down naturally. But my average is just over 150 ADR on it. The pound yen was 225. That's the reason I've gone with the aggressive on the pound yen. This one, I'm not actually as worried about it. I think we've got some weakness coming in the US. I'm more fundamentally based short on this because I think there's more weakness coming in the US. We had confirmation this morning about rate drops again from the US, which was said last night. And that CPI figure on the yen as well, I think is going to help them make that decision, or at least announce something about making that decision next week in the monetary policy statement on Tuesday for the yen. So strengthen the yen. So I think this is going to come down anyway. But the pound was getting a little too much. So those are your yens. US dollar Swiss is also extended on the 4. That's sitting back up at where we were. We looked at this one yesterday, didn't we? We were exactly the same spot. So we are hitting this sell area. Buyers are struggling to get back through it. So good looking potential short, I think, on that one, but not very extended. Pound New Zealand, nice extension on that one. I'm already in this one. Yeah, looking for the return to origin move on the pound. Pound Swiss. This is really just this move here, because this was exactly what I was talking about earlier. Orderly. Yeah. Look at this. Yeah. The banks are not stretched or positioned massively long. They've been in and out all the way up. This is why there's no propulsion gaps. This is why we use propulsion gaps. Large orders mean large profit on the P&L. That's why we come back and test them. So this very little here, that's kind of filled. If you look at that wick there, that's filled that propulsion gap. Got one down there, but that's your main move, which I'm looking to come back and retest. And Euro New Zealand and Euro Swiss are the only other two. Again, nice and orderly on the way up, but looking for a push back down into there. Again, Lagarde rallied the euro this week. Still think it's coming down at some point. We just don't know when, do we? So that's nicely extended. Good opportunity for a short on that one. The reversal alert would have been yesterday. You've had this morning's obviously up there and the retest. But there was an alert on this one. There would have been an alert on this one yesterday. Yeah, so like it just chopped yesterday, look. So we got extended yesterday above the 75 level on the 4 hour, that double top wick there. So you'd have had a reverse alert in there. And you'd have had, you know, just that area there would have been an alert. So you're back to basically where your alert, where your entry would have been. And the other one's Euro Swiss. Very big extension. So this is a lovely short, this one. Got two on this on the H1M5 mean reversion. My initial target was down there. Just moving my target on this one. Not going to go all the way back down there. Come down there. So just come see if we can come and retest that area there. This is a news spike here. So that propulsion should at least get tested on the way down, which is basically just retesting that level there, because that's the break of that level, which is why we've got the propulsion. There we go. There's your extensions. Come on, DAX, make your mind up. What can you do with it? Morning, Gayaraki, Peter. Morning, Tammy. Morning, Vink. That's it for today. I've got nothing else really to discuss today. So, 2, 3, 4. There we go. DAX has just put a nice big sell order in there. So we'll see if we can get the TP hit on this one. Again, for me today, the same play as I did yesterday. If I can get a decent hit to target on the DAX, that'll pay for the FTSE. Nothing we can do with it. It's just dead as a doornail at the moment. So one pays the other. And if we can get a decent drop on the DAX, it's a lovely potential market structure short on this. But I really think the FTSE today is going to be able to rally. So it's difficult for these two to go in the opposite direction, because during the European session, we're buying stocks in all sectors. So when you're going to get rallies in this, it's automatically going to push this up, because they'll be buying stuff in the DAX that is in the same sector as the FTSE, like the motor sector, for example. So makes it harder for that to rally. But we're going to need that continuation drop in the pound, which at the moment is pulling back a little bit. Not on the CAD. Yeah, so it's pulling back ever so slightly. I thought it was pulling back on the others. Oh, no, it's not. Maybe it's not. Which means we should be getting that rally. So we'll see. Morning, Franco. So yeah, morning, Mustafa. So yeah, that's really all I've got for you today. It's just a case of watching the positions. Hopefully we're getting some of the moves starting to play out. Should be able to bank some decent money today, hopefully. As I say, I mean, it's the same on all accounts. As you know, I'm trading 3 different strategies, all mean reversion, all using extensions. So I'm going to get into the same position. So pound yen is always going to be the problem on all of the accounts because they're all getting extended to the same level, just different entry criteria. Last night, the DAX missed 4 pips to take profit. On the DAX, yeah, I was out of the DAX hedge. So I'm going to do a little bit of work on the SIH EA today. I'm going to test some automatic re-entry, automatic re-hedging mechanisms. Just because what I'm finding personally using the SIH is I am going off to my spin classes and things at like 5 o'clock in the evening, and I'm in hedges, and I'm thinking, I really want to get out of this because I think there's a good turning point, but I've got to rush out and I'm not going to be around to re-hedge it. So what I'm going to try and test is seeing how easy it's going to be to just put a re-hedging mechanism into the EA. So for example, if so we hedged over here, aren't we? So if we get up to that hedge and obviously we get the aggressive move on, if the aggressive is triggered, place a pending re-hedge, the same as the original hedge is what I'm planning. So whatever that hedge is, which in this case is $175, you're basically doubling your risk. If you re-hedge, you're doubling your risk. I don't want to use the high. So let's say, for example, we triggered our short here. I don't want to use a stop above the high because that could be, let's say we get a big, we hit target as news strikes, for example. That is a massive hedge. It's going to be very expensive if it goes wrong. So I'm looking basically just to reuse whatever we've got here. So when we trigger that pending order, the market is going our way. So we've got momentum on side. That's why we trigger that. So I'm thinking that's probably going to be fine as a re-hedge level, if you like, which will obviously just double your risk. But it means that you can kind of leave it unattended when you're getting out of hedges, which is the problem I'm finding at the moment. I've had a couple of times in the last, well, since we've been back in January, where I've been like, I just want this to go 5 more pips, 5 more points, and then I'm just going to get out. And I'm like, well, I can't do that because I won't be here. So I just get out there. But I think it's going to hit that level. So I want a mechanism to just automatically handle that. If it does do that and I'm totally wrong, fine. I'll just double the loss. But also, when you look through all the testing I did with SIH and all those screenshots of those big losing days, so all the biggest massive losing days that we had, like that one wasn't a big one. That's only 7. These are all 6K profits. So that's just a normal hedge day. But those big ones that we had, which were the problem ones, which were when you get, there we go, 25 grand loss. This is on a massive account, obviously. So these figures are, this is kind of like 4 or 5 hedge loss. So you hedge, you exit the shorts, you don't get back into those longs until there, and then the market collapses. Re-hedging off the back of that will stop all of that loss. It removes all of that. Yeah, so would a stop loss be useful? No. You don't use a stop loss in hedging. If you want to use a stop loss strategy. Use the opening range breakout EA. This is a hedging EA. It's not, you don't use stops. You don't stop out on a hedge. It's just a trade, isn't it? The whole purpose of this is we're hedging. Buys us time. Hedging buys you time. Stop losses make you lose. I'd much rather have an opportunity on the FTSE now to go, okay, you don't know where you're going yet. We'll wait. Okay, if you get up to there, I will get out. if you get up to there and pull back and get me into another position and then you decide to rally to 150, I will lock in twice as much loss. But I'm not going to take all of that loss, because if you get to 150, I'm probably going to have a short again. I'm going to have another go. Yeah, different strategy. So yeah, I'm going to work on, hopefully work on that today. I've got another EA that I'm in development on as well. I've got a lot of stuff going on at the moment. And I've got this stupid cough, which is annoying me. It would be helpful to see a price line for the aggressive exit. Why? You got a pending order. Why do you need a price line? It draws a line, draws a pending, it places a pending order in the market. It actually draws the line because it's a pending order. Look, like this TP. Yes. There is a line drawn by the order. You don't need a line. It only triggers an aggressive exit once you've exited one side. And by doing that, it automatically draws a line because it's put an order in. I could draw a line over the pending order, but kind of over-engineering, isn't it, really? Might sound stupid, but on pound yen, why is my 3-week low line lower than my 2-month low line? Why does it have to be lower than your 2-month low line? Think about what you've just asked. This was the low of 2 months ago. Last month, it went lower than the 2-month low. This is the 1-month low, which is below the 2-month low. Why can't the low of 3 weeks ago, it could be above or below it, can't it? It's got nothing to do with 2 months ago. It's 2 months ago. Yes, AZ, it might sound like a stupid question, and it is. It's just drawing in the low from 3 weeks ago. It's got no relation to previous months, has it? I thought it meant the lowest point of the last 2 months. This is the low of 2 months ago. This is your 2-month low. It's not the lowest point in 2 months. That's the lowest point in 2 months last month, because it was lower than the previous month. But that is where we stopped 2 months ago. This is 2-month high, which is above the 1-month high. All it's doing is just saying, right, in November, what was the highest point in November? What was the lowest point in November? We want to know about it, because why? Markets buy previous month's levels, and they sell previous month's levels. Whether it's the higher or lower than the previous month is irrelevant. It's a level we bought at. We will buy at again, potentially. Not always. Sometimes we slam through it and ignore it completely. But market has a memory. But I see what you mean, yeah. It's not the highest point in the last 2 months. It's the highest point of 2 months ago. It's what we call a turncoat, or a turncoat support, or a turncoat resistance. It's an area where price, if it comes and retests, quite often will reject. You get when you're looking at a quarterly move in the market, they will have a bias for the quarter, but you'll have news that will mean that it will not necessarily go how they want it to. It will go deeper than they expected it to, but they will be going, right, let's buy November. It comes back, and then we get a news event that goes, oh crap, we're still long bias on it. So when we get back above that level, add into the November move. Same with weeklies. Yeah, the market makers, well, not the market makers, but the banks and institutions operate on daily, weekly, monthly levels. That's all they use. So, you're buying price points. They're buying 182,700 in November. And in January, they're buying 182,700 again. They're selling 188,650 at the moment, which is what they sold in November. We just need to know where the price action turned. Where did the buyers turn into sellers? But this is why I say with this one, when you get old levels, when I look on like the FTSE today, looking at the FTSE today going, it's just bounced off that 2-month low. Yeah, to the pip. But it's an invalid support resistance because we hit that level, we hit that level, we hit that level, we hit it, went through, and we invalidated it. If you see price wish-washing over a level like that and ignoring it completely, the level's not there anymore. It's invalid. But as I say, they have a memory. Price has a memory. It's like saying, do you remember when in the banks are like, do you remember when we sold 75.25? Yeah, we sold it 3 times, didn't we? Yeah. Right, we're hitting that level. Should we sell 75.25 again? They need a number. It's just the market seems to respect them. I don't know the logic, but it's, it just does, doesn't it? So that's why they're there, because it was an important point in November. It may be important again. If you need somewhere that you are expecting something to happen, you need something, don't you? So you just need something. When you're going long on something today, I mean, I didn't use that level at all because I thought it was invalid. Turns out it's not. It could also be 100% coincidence. No one knows. No one's ever going to be able to answer that question. All you can do is go on what you see in the past, and that's it. I see these things getting respected over and over and over again because they have before. That's all it is. You can have as many as you like on your chart as well. With the indicator, you can go back and use, I'm using 2 months. Where is it? Support resistance. So I'm using 2 past months. You can use up to 6. There's no point in going back more than 6. It's just pointless going back anywhere more than 6 months. Not for intraday stuff. But 2, otherwise you tend to get, the further back you go, the less relevant they are. Anything further than 3 months ago is kind of done. The market's different now. The world's different. It's different. We're different. So you want to look at kind of recent movement. Which also brings me on to something else that came to me in a dream last night with ADR. I'm going to do some further testing on ADR on smaller ADR levels. So I've got this new EA that I'm building, which is a position trading EA, specifically to simplify the market reversal alerts EA and make it easy. Just want to simplify it because everybody gets very I mean, rightly so, because there's a lot of inputs in it, but it gets very confusing, the market reversal alerts EA. And it's given me the ability to do some very quick testing on ADR. And last night, I was thinking, dog woke up at 3 o'clock, needed to go in the garden. Why she didn't do it last night, I don't know. She was gross and bad books this morning. Woke me up at 3 o'clock this morning. I didn't get back to sleep until about 4. But these market conditions that we've been sitting through here, these movements that we keep getting, these big, strong push and then sitting around, and these big, strong push and sitting around, these are really throwing out the 10-day ADR at the moment, because this is why we're experiencing these 175 ADR moves. These are normal moves. We're just seeing really contracted ADRs because the market's been sitting around a lot. So I'm going to do some testing on the last sort of 6 months using 2 ADR and 5 ADR. So what we're usually using with ADR is we're looking at the last 2 weeks of movement. So how volatile has this thing been in the last couple of weeks? Because when you start a move on something, you expect it to continue that type of range. But at the moment, we're getting these explosive moves and stops and explosive moves and stops. So we should really, when we're looking at our targeting and our spacing of our positions, and this is something else that's become evident to me over the last couple of months, I've had some positions going in which are 1.5 ADR apart. They're not 1.5 ADR apart, really. it's normal price movement. It's just that my ADR numbers are down. So I should really be using smaller ADR increments, because the EA is not, the market isn't managing to get to 3/4 of an ADR. So if using a smaller ADR multiplier, 2 or 5, looking at the last week or the last few days, is going to give you, I think, more accurate spacing at the moment. And the only reason I want to test this is because I have no idea how long this contraction is going to last. We have been in a contraction for like 6 weeks now on a lot of instruments. This is untradeable. But if you were using a 2 ADR, you'd have got ADR reversals on this quite a few times, and they would have been so easy. It would just been easy money. But obviously that might expand again. The problem we've got is obviously we are stuck in this period of when are we dropping interest rates. They're talking March and July. I can't sit here with this type of trading condition until July. I'm not going to be able to extract enough money out of the market. So I'm just looking at a potential adjustment in ADR. And you'll see the difference if you look at the ADR dashboard, what happens when you adjust it. So that's on a 5-day ADR, a 10-day ADR, obviously, which is default at the moment. If you drop that down, something like, let's pick the 2 ADR. Yeah, suddenly you've got opportunities. Euro New Zealand. Now that is not hit ADR yet, but it's hit this range and this range combined. The average of those two is going to be about that. Done it today. And we're finding a lot of this type of movement, aren't we? A lot of this type of movement. 2 ADR is going to give you 1,000 opportunities to get into this type of movement. We've been sitting here for weeks and weeks, every single session going, no ADRs, no RSIs, no ADRs, no RSIs. So you've got to think about adapting. The problem with adapting is when you adapt, there's a chance that the market will then go back to normal, in which case then you're getting in way too fast, way too soon, and you're going to get hurt. So you've got to sort of be on top of it. But I'm just, I'm going to do some testing. I might do it over the weekend if I get time. Just over the last 3 months, just to see what impact a lower ADR would have. We want to know what's going on really in the last week rather than the last couple of weeks. Yeah, so we're only dropping it maybe by a week. If you change that down to 5. Yeah, we're back to normal, back to that 1. But it's more sensitive, so we will get a few more. The lower the higher sensitivity, in this case by dropping ADR, your instruments are, the more signals you're going to get. The lower sensitivity you use, the less signals you get, the stronger those signals will be. Same as with the RSI. So I'm going to work on that a little bit. I'm always, I said this last week in the live room as well, I'm always dubious about adjusting my instrument criteria because they've served me very well for many, many years. And when I have changed them, it's invariably because something's not working. And what you're doing is you're changing your strategy. Your strategy works. If you change your strategy, you don't know what impact that's going to have when you move forward. So it's better to sit through these ideally and carry on doing a low month. You're not going to get a lot of profit out. But when it returns to normal, it will all come back to normal and you'll be getting those 15-20% months. So, but this seems like an extraordinarily long amount of sideways we've had, which I've not seen before. And I'm just worried about the inflation and worried about this conflict sending inflation up for energy and food production, which are the core inflation figures. If that route around Africa means that canal is no longer usable, and that's what we've got to do, inflation is going to go up worldwide. If inflation goes up worldwide, those interest rates aren't going to drop. If those interest rates aren't going to drop, the market's going to be sitting there still waiting. So we could potentially have a prolonged period of zero interest rate movement, which is exactly what we've got at the moment. This is why we've got that sideways action, because we've just come out of 18 months of interest rate rises and we are absolutely flat. If this starts to go back up, they can't do that. All they can do is that, which means that we do this. So you've got to adjust yourself to the market conditions. The market regime is contracted. So I'm just going to do a bit of testing. I'm cautious on it. I'm always cautious about changing anything, because when you've got something that works and has been working for many, many years, one tweak can break it. It's like a very finely tuned instrument. So, not that I play any instruments. Triangle, that's about my level. AZ gets the pass. Ed 209 moments happen once every while. Plus it's Friday. Yep. That wasn't really a stupid question. It was a misunderstanding of how the indicator draws. Why would you know that? Because you didn't code it. So there you go. Wasn't really a stupid question. I've been waiting for Friday since Wednesday. Yeah, I'm waiting for the end of this month, to be honest, at the moment. This month can't be over soon enough at the moment. It's just one of those, look at it again. It's just one of those months where it's just pulling teeth. I feel like I've been trying to pull teeth out of this market since the end of November, since my birthday, which was towards the end of November. Since that, I put on weight, because since my birthday, I've been doing nothing but partying, because my birthday runs into other birthdays, which run into Christmas, which runs into New Year, which runs into about half a stone to 3/4 of a stone. And it's pretty much around my birthday. The markets went, yeah, we're going on holiday. So work's been incredibly difficult. It's just one of those, I just want January to get over and February to work. And February's a short month as well, so your P&L is always smaller in February, most of the time. Anyway, if you're having a look at playing with the ADR levels, how about potentially reducing RSI levels? Do you think I should reduce RSI levels? Sitting in 7% of drawdown with all that on. RSI's fine. If I reduce RSI levels, that is going to be even more. RSI is fine. RSI measures relative strength. To reduce the RSI level, you'd have to go up to a 28 RSI to get more signals. I've never gone above a 21. So I wouldn't do that. So yeah, RSI is the relative strength. We're measuring the relative strength of movement. So yes, you could, but I think you'd regret it. There was one instance, I think in 2020, is when I was on Zoom. So you can't scroll. It's really annoying. You can't go back to you can't easily just get back to when did you start lives. But it was before I started doing these sessions, which I think was 2 years ago, 2024. So it's probably 2021. I changed the H, because I was trading H4M15 then more than H1M5. And I changed the, my God, I've been doing this a long time. There you go, December 21. So it would have been summer 21. I changed the RSI 14 to the RSI 21 on the 4 hour to speed up the signals, because it was flat. It was summer, and if summer is flat. And as soon as I changed those RSI numbers, literally within a week, we got 2 squeezes start at the same time. And I got into those squeezes like here instead of here, because the normal 4 hour RSI 14 that I'd always been using would have got me in there, and I'd have gone, oh yeah, whatever. But the 21 got me in here on multiple pairs in multiple squeezes at the same time. The market just came to life. And that was exactly the same scenario. And it's that, hang on, this isn't working anymore. What's wrong? So let's see if that makes a difference. So you back test it. But the trouble with back testing a change in an instrument is you have to back test it only over the market regime that you have, which in this case is sort of a neutral, quiet regime. If you back test the same RSI when the market is trending, you're going to get loads of squeezes, and it always talks you out of it every time you do it. So if you go on that, like you said, we said, well, let's test, more at changing this to a 28. Yeah. So you look at the difference. If I could possibly even select it. Changing that to a 28. When you back test it. Oh, sorry, no, you need to go down to 14, wouldn't you? Sorry. All of a sudden you go, holy crap, I'd have got in there. No. I wish I wanted to get in there. And it talks you out of it. It's like I would have taken another week of drawdown of 38. 2 ADR. So I'd have been in it for 2 ADR more drawdown for an entire week longer if I'd have changed it. Same with X, same with Y. Yeah, so you will talk yourself out of it. There, I would have got in there long on that. Whereas I wouldn't have got in long with the 21 RSI because that wouldn't have triggered. I would have got in somewhere around here. Couple of ADR, weeks difference. So it's, when you back test these things, you will talk yourself out of it. But I'm testing it over this period of time. So, you've got to make sure you're testing it over the market regime that you're in. So you need to go and look at periods that look the same as what you're experiencing, and why the reason you're looking to make the change is because of what's happening now. Yeah, this is a bad example because the yen has actually been one of those currencies that has actually been lively. This is what I'm talking about. November, dead. One move, dead. Haven't been able to do anything on this for 2 months, nearly 3 months. Yeah. This is where we are with a lot of these instruments at the moment. We've got to find, ways of trying to extract a little bit out of it. And ADR reversals are quick in and outs, which is why I'm looking more at ADR than RSI. But do your own testing. There's no right or wrong. It's going to be less or more pain. That's all you're ever going to experience, isn't it? Less or more drawdown. Kazoo, yeah, I could play the kazoo. There is only one note on the kazoo, so I'd be okay at that. Triangle, kazoo, cymbal. Automated keyboard. Market want you to enjoy your holiday because you've been working so hard last year. Yeah, well, I'm not on holiday. I've had a holiday. I don't mind having a holiday, but a payment holiday isn't what I like. So at the moment, I'm getting a payment holiday. Well, I'm not. I mean, this is going to be quite a light month this month. $2,000. One target for about 6 to 8 if it carries on doing what it's doing, which is all right. But I mean, it's been better. But January is always very tricky anyway. So almost need a range set up for the EA. So that is something I'm looking at as well. Is incorporating support resistance into this new version of the position trading EA. What I'm trying to do is I'm trying to create an EA that is a little bit like the idiot EAs you have on the marketplace, where there's 5 inputs. Do you want to use high risk, low risk, medium risk? Do you want to trade aggressive entry, aggressive exit, or nice exit, nice entry? It's all that. It's like they dumb it down. They don't tell you how the strategy works. They don't tell you what it's doing. They just say, what do you want to do? Do you want to be aggressive or weak? No rubbish. You need to know how something works to be able to use it for a start. So I'm not going to put something on my chart that says, do you want to be aggressive or calm? Yeah, but how am I getting into the market? What's it doing? So I'm trying to dumb down the market reverse alert CA in a very... I'm getting rid of all the crap everybody asked me for, basically. The Market Reverse Alert CA has 100 settings in it, which I would never entertain using ever. And I don't. You know what I use. RSI above there, go short. Scale in 3/4 of an ADR apart. That's literally, I use 3 of the 99 inputs. I don't need it to do anything else. I need it to automate me when I'm not in front of the computer. That's it. And all I do is I scale in when there's a reversal alert and it's moved 3/4 of an ADR. It's not rocket science. I don't need trailing stops, auto break-evens, auto drawdown control based on this, that, the other. Don't need it all. So I'm building a simplified version. One, it's going to speed up testing 100 times. You'll be able to back test a year in 5 minutes. Two, I want multiple entry methods. I want to try and not just rely on reversal alerts. Sometimes, as we know, with reversal alerts, the market pushes like that for ages. The support rectangle is here, and then you are one ADR away, and then it goes, and you get triggered there. That would have been your average if you'd have taken a short up there. So I want to use more than one entry criteria as an option. So a moving average. When we close below a moving average, if the support rectangle is miles away, get in on an MA. Bearish engulfing. Yeah. If we've moved an ADR and we get a bearish engulfing or a shooting star, have a crack at that. The reversal alert might be down here and you might not get it on. That's the other thing. If your entry's there and 3/4 of an ADR is there, you push above that and then you push back down and the reversal alert happens below that level, you don't get a trade. Yeah. So that I'm going to adjust. And there's a few other bits and pieces. Automatic aggressive drawdown control. If I've got 5 positions on, calculate the lot size and take 50 to 100% of that lot size for me automatically. Let's get this ramped up. But you're going to need to sort of watch it to do that as well, because it's going to take aggressives and you'll be like, what the hell? Why would you take an aggressive there? There's no support, there's no resistance, there's absolutely no reason. So you would shut it out and it would have another crack. But again, you can't fully automate this. You can't fully automate it. One of the things I'm looking at as well is, again, in these types of markets, yeah, we haven't had a trade on this all month. We haven't had one this month. So this is now 6 weeks since we've had an entry on the CAD Swiss. We've had 1, 2, 3, 4, 5, 6, maybe 7 or 8 support resistance bounce plays. Yeah. All easy in, out. So get in a resistance level. So if we get a close signal after we have hit this level within a certain distance above it or a certain distance below it and we get an alert, short it. Forget the RSI. It's not an RSI entry. It's a resistance entry. If it doesn't work, what do? Scale in as normal. Wait for the next resistance. We get a bounce out of that. So I want to try and incorporate support resistance of weekly levels into it as well as an option. So the options will be, do you want your market condition to be support and resistance, RSI, or ADR? Or all of them? I don't care how you get me in. If we get to a support level and bounce, get me in. Forget the RSI and the ADR. If we hit ADR and we're nowhere near a support, get me in because we've hit ADR. If we haven't hit ADR, but the RSI's got extended, we're nowhere near a support, get me in. If all 3 conditions are the same, get me in. But you only do it once, aren't you? You're not going to do it 3 times. So it just gives us more opportunity. And you manage the positions the same, like I keep saying. It doesn't matter how you get into the market. It's irrelevant. You can flip a coin and go long and short. You've got the same odds of it working or not working. It's either going to go up or down, isn't it? How you manage the position once you're in it is the important thing. And that's what the EA is built and designed to do, is to scale in and manage your positions. Do the drawdown control if you want it to. Aggressively enter if you want it to. So I just want to make a new version. It can't replace what we've got because obviously what we've got, everybody's using. I can't just go, here's the new market reversal alerts EA, because everyone's going to go, that doesn't do this. No, because it's too complicated. So it's a different thing. I'm mainly building it for myself. Because I want to do this, basically. Targeting support propulsion gaps. I want to target propulsion gaps. I don't want to target a percentage of ADR or a percentage of my account balance, because if my account balance is here and there's a whacking gate propulsion gap target there, I don't want to get out there. I want to get out here. But I will make the decision when I see what the price action does. But I don't want it to automatically get me out just because we've moved 1/4 of an ADR. Yeah. I want to get out when we're going somewhere. So I want to be able to target levels rather than distances or monetary amounts. But 2 years ago when I built the original, I didn't want to do that. Now I do, because I've changed the way that I personally trade, and the EA's changed the way that I trade because it automates so much more of me, doesn't it? So, yeah, there's lots of things I want it to do. But before you start going, can it do? No, it's built for me. It's going to do what I do because I think that's right. If you want it to do what you want to do, the market reversal alerts EA does it all. You can do support resistance bounces with the current product. But it's fiddly. But then again, you know, I like the idea of alternative methods to it instead of RSI. Yeah. Position trading is a methodology. It's a way of trading. It isn't reliant. It's reliant on mean reversion. It only works as mean reversion, and it's reliant on the market reacting. And market reacts when it's stretched. This measures stretching. ADR measures stretching. Resistance doesn't measure stretching, but it is a reaction. Yeah, it's where we get a reaction. We're looking for a reaction. We're looking for the market to have gone to somewhere and reacted. When it gets to a resistance, when it breaks a resistance, it tends to rally to the next resistance. So there's nothing wrong, I don't think, with taking that there. If the RSI was flat at 50 there, I wouldn't have a problem. Why is the RSI flat at 50? Because we're not going anywhere. If we're not going anywhere, it's not a problem. If, when we get here, the RSI is about 60 odd, yeah, and then it goes like that and breaks through, what are we going to get? An RSI extension. So what are we getting? One extra entry. But what are we missing at the moment? All of those, we're missing all of this because of this or ADR not triggering. Just another reason to get in, isn't it? So it's quite complex to build, but I've been working on it for a few weeks. But basically it got a little bit born from that hedging EA that I was building. I was like, this works better as a position trading EA. And then I was like, why don't we just do this? And it sort of evolved as the hedging thing was sort of petering out. So, yeah, anyway. So, yeah, I've got a lot of work to do because I've got the other bit with the SIH EA that I want to test as well. We're not going anywhere again today. So this move off of the UK retail sales has just caused a massive range to form across the board. The pound is still looks like the pound is still doing all right. We're still pushing down on all these pound pairs, but the FTSE's not reacting at the moment. So I think it's a case of just hanging on. If I can get flat this morning again, if I can get that up to that with a move, I'll close it out. If not, I'll be in them later. We'll have a look at it in New York. 1:30 this afternoon, we've got the Canadian retail. So if that comes out as a massive hit or miss, it might give the US a little bit of a squeeze as well. But other than that, we've only got Michigan this afternoon. Lagarde's speaking at 10. I can't believe this thing's sitting around until Lagarde speaks. She's been speaking all week. There's not going to be any surprises today, is there? But I think it's just Friday, isn't it? So, question about the ADR indicator. ADR for the pound New Zealand shows as 140, but when I measure it on the graph for the ADR high to low, it says 1731. Yeah, pound, it's not measured that way, is it? Pound New Zealand. ADR is a measurement of average daily range. It's not the distance from that line to that line. That line to that line is, for me, 1575. ADR is 130, 1300. Yeah. So ADR, if you go and watch the video, you obviously haven't watched the video about ADR on this page. Don't watch this video and explain how you calculate ADR. It's the average daily range of the instrument. So how far up and down on average does this thing move in a day? Yeah. So from the low of the day up, the low of the day up is 130. Yeah. So if I measure that distance, 130. From the high of the day to the low, 130. Yeah. So if this thing does that all day long, what is the range of the day? 104. Less than average daily range. Yeah. So it's not, we're not measuring the distance between these two lines. These two lines move. If this pushes down today, this line comes down. Why? Because this line is drawn from the low of the day. So if the low of the day gets down to here, 130 pips up, you'll find the ADR line because it's measuring the average daily range of the instrument. It's explained in the video, but that's basically it. That's why. You're measuring it wrong. Like the idea of alternative instrument, yeah. MRA Mark II. You see, I'm not going to call it anything to do with MRA because it's not going to use the market reversal alerts indicator at all. It's a position trading EA. This is an entry method. This is an entry criteria that shows you that the sellers are back in control of the market. There's more than one way to show that sellers are in control of the market. This is a structure break, a break in market structure. This isn't a market reversal alerts EA. This is a position trading EA. It scales into positions for you based on entry criteria, not on a market reversal alert. The market reversal alerts indicator, I built this to show me a confirmation of structure. It isn't the best entry criteria. In this case, the best entry criteria is a bearish engulfing or a 9 moving average cross. However, these indicators have less success rate than a reversal alert because a bearish engulfing is 5 minutes worth of price, or in this case, an hour's worth of price action. That doesn't mean the next 5-minute candle isn't going to be bullish. Yeah, there's a bearish engulfing. That's not bearish engulfing. There's a bearish engulfing, and then it went like that. That doesn't mean it's going down. That means that the last hour, there was more sellers than buyers. It didn't cross below the 9 moving average, so that's slightly better than a candlestick pattern. But a 9 moving average cross is part of a pullback. When you get the last batch of sellers that took control of the market regaining control, we know that there is enough selling pressure from that move to combat those buyers. That means that when the buyers push back, they've got to move twice as far. And if they aren't able to do it, we get a retest and a market structure break. This is a much more reliable pattern to tell you who's in control of the market. The downside to it, and as every indicator on the planet has a plus side, it has a downside, is it can trigger and miss, in this case, 3/4 of an ADR of movement. Bearish engulfing will capture that 3/4 of an ADR. If your average price cannot be 1 ADR apart, but can be 3/4 of an ADR apart, that will get you out of positions twice as fast. And it will also get you into positions closer. So with the market reversal alert CA, I'm just going to see if I've got an example of one that's got multiple, 2 positions far away. Euro pound might be. Yeah, so euro pound ADR is 30. Distance between those trades is 30. So that's 1 ADR. I've asked the EA to get me in 3/4 of an ADR apart when we see signs of bullishness. So first trade that was taken back there, we pushed down 3/4 of an ADR there, right? But I didn't get an entry here because there wasn't a reversal alert. By the time we got a reversal alert, the distance between that and that was less than 3/4 of an ADR. So that move there that got me almost a break even on that, and if I'd have had a position on an MA cross or bullish candlestick pattern, would have brought my average of those two positions down to here. What's that? Profitable exit. Didn't get it because the market reversed alerts. Yeah, he was too slow to react. Yeah. So there is an advantage in seeing slow price action and confirmation, but there's a disadvantage in that you're going to miss a hell of a lot of exits because you're not getting in close enough. So, and that's partly why I'm building it with different entry criteria, because market structure isn't the end of the, at the end of the day, it's not the be all and end all. It's got its flaws. Look at some of these ADR reversals we get, yeah, where it pushes up to 175 ADR. The reversal alert is below the 100 line because that's buying. There weren't any sellers there. Yeah. So for us to get the sellers to take control back, we've got to push 3/4 of an ADR down just to get an alert. We've missed it. But the 9 moving average, for example, would have got you in there and you'd have had half an ADR out of it. That would have moved your average up to there and you'd have been out on that move. So there's a lot of advantages to this. The 9 EMA, for example, is what I used to trade in stocks. It was the signal in stocks. A 9 MA cross was a signal. A lot of stock traders still use the 5 MA and the 9 MA as your signal. But when you look at those two on a normal price action chart, you'll find a break in structure just below the 9 MA. Yeah. But the break in structure is a confirmation of the 9 EMA holding. So think about a 9 EMA. Break above the 9 EMA. Yeah. You come back below the 9 EMA. You push up again. And then you come back and retest the 9 EMA. That's the structure break. Now that could do that, in which case the market reversal alert saves your life. But if it is that move, you would get in there and not there. No difference really much, is there? But when you're scaling into a position, it can be the difference between your break even being hit or not on the pullback. So this is why a lot of traders use the 5 EMA when they're scalping on tick charts and on 1-minute charts, because the 5 EMA is that. That's enough to make money on an initial entry. But you are going to do that all the time on the 5 EMA when you're going sideways. It will kill you. As a position trader, if it does that and we get in there, which is closer than the market reversal alert would have triggered us, that's not a problem, is it? What do we do? It's just scaling when it does that. If it does that, we're out. So there's a lot of advantages in choosing the other entry methods with position trading, which is what I'm exploring with this. And also the fact that the MRA indicator has an awful lot of settings. Again, I don't use any of them. The retest, for example, I just don't use it. It's lovely, and it's a lovely confirmation. Look at that, beautiful. Reversal alert, retest, happy days. I'm happy to get in there and get out there. I don't need that. If I get in there, I don't need that, do I? Because I can use that. Far enough, isn't it? So it's just, I just want to build a model, an EA to model other position trading entry techniques, which will try and eliminate these moves where we get these massive moves and you get these pullbacks where you just can't get in because the market, the way the market moves is too aggressive and you just don't get the structure break back to get you in. But the position would have worked out if you'd have taken a different entry criteria. And again, there is no right or wrong. You don't know which one's going to be the one to use, do you? Oh, I should have waited for a reversal alert. If I'd have waited for a reversal alert, I wouldn't have got in. Other times you'd be going, oh, wait for a reversal alert. I didn't get in. If I'd used the 9MA, I'd have got in. Oh, if I'd have only taken that shooting star or hammer, that would have been perfect. And it would have been a massive trade. There's never the right one. One of them is going to be right. You're not going to know which it is. But if you've got the option, and you could choose all three if you wanted to, you can do that, can't you? Euro coming down, is it? Yeah. EU trade chief is talking at the moment. But we're waiting for Lagarde, 10 o'clock. So I think this is just the euro being dragged down by the pound. Don't forget we're the closest trade partners for each other. So when one gets hit, the other tends to get hit. Pound CAD, I'm out. Target hit on pound CAD. Was it pound CAD? Pound odd, sorry. Pound odds, there's the return to origin move. Out. It's only a little profit, but I want stuff. I want money. Actually, I'm going to bank some more. Euro odd. I could get to ADR, couldn't it? We'll leave that for a minute. So you look at that reversal alert there. Look. So that entry there to that entry there is 95. ADR is 138. $103. That got me in at 95. That would be spread. That'll be spread on this one. So look at the reversal on it. Look there. Absolutely perfect. Why? Because it was a really tight structure. If that hadn't have been a bearish candle and that had been a run all the way up to there, the reversal would be here. The entry would be there. That's too close. So in this case, that worked perfectly. But that one candlestick being green would have made the difference between the entry being on or not on. Massive difference, isn't it? Potentially. And your 9 moving average would be doing this. It would get you in probably in a very similar spot. It would probably be that candle rather. In fact, the alert would get you in faster on this one probably than the 9. But 3-bar reversal. There wasn't one there. Big bearish engulfing. You know, there's all sorts of ways you can get in. So I just want to test and give options, really. You know, make it a bit more flexible, but also not overload it with all the other crap. That's the point. So I was just looking at possible exit on this pound yen. It's not far away. I just want to see what profit I've got on these positions. Wrong one. $0.34. 187, right, okay. I'm going to take that one off. And I'm just going to do some DD control with that. 186. 2, it's that one there. I'm going to take half that off. Should really use that one, but it's a bit too high. I only drop the average ever so slightly. Normally I would take it off of positions below, so it pushes the average up, but it's not going to make a lot of difference there. So just banked 0.4%. If we can push up and retest that level, I'll get it again. Take it off again. Rinse, repeat. Just keep banking. So yeah, that's a bit of profit for the day on the ADR reversals. Also got the pound New Zealand, which has got a nice profit. Not quite enough. I want to see that get down. All these, I think, have got a really good chance of getting down into this base, but I'm just trying to reduce some of the drawdown on the pound at the moment because it's a bit squeezed. Hedging, nothing to bank. Obviously, the hedging strategy is based on the hourly charts. There's that sell, that second sell on the Aussie dollar yen we looked at this morning. Just go low. So obviously this is trading the hourly charts, not the 5-minute charts. So the time it takes to get a reversal alert, obviously on the hourly, is a lot longer. So, you know, this is a much slower strategy. But yeah, 2.7% bank this month so far. Not doing bad. This thing's driving me up the wall. Mr. Lunary, oh, so this is the second half to your question. I've already answered on ADR, isn't it? I'm trying to set my TP and was looking at points to set TP, but getting confused. Can you explain this? If I want to set it to 1 ADR TP, how should I go about doing it? Just measure. So if that position there, I want 1 ADR on it. ADR is 138, so just measure down 138. Yeah, it'd be there, roughly where the average line is on this particular one. Yeah. Literally just measure. Price moves 58% of the time within average daily range. So if you target 3/4 of an ADR, you've got a high probability of that getting hit on any given day. If you target 1.5 ADR, the market's got to move for a good couple of days to get to that, probably, unless it has a big ADR move day. Yeah, that's the idea. This is why we use ADR. It tells us how far roughly price is going to go. So if your target is here, like mine is, I'm not expecting to hit that today because it's going to have to do 175% of its normal average daily range. It's going to need something pretty big to move it down there, isn't it? Literally just a measuring tool. It measures the average daily range of the instrument. What's the settings for the support and resistance? I haven't got any yet. I haven't built it. What's the settings for support and resistance on the market reversal alerts, EA? It's in the manual. It's the price box. So it's down here, look. Buy price level. So it's called the price touch feature. It's a new feature that was added in version 4. The price touch feature. So basically the buy price level and the sell price level and the bars to verify. So if you had a resistance there, for example, you would enter that price, whatever that price may be. And when price hits that level, yeah, it starts to count. If you get a reversal alert within 10 bars of hitting that level, you can be above it, you can be below it, you can be anywhere you like. But if you've hit that level, it goes turn on reversal alerts EA. You get reversal alerts within 10 bars, in this case, of hitting that level, it will get you in, i.e. hit reversal alert, support bounce, resistance bounce. So it's something you set up manually. Yeah, it's not automatic. So it's be like a case of like, you know, this is hit this level here. Look. I see that, but so that's 533.03. You can see that? Yeah, you can. It's not very thick, is it? But so hit that level. We came up to it. We just fell short of it, pushed away. We came up, we hit it again, we pushed through it, we hit it again. Yeah. So basically the market was selling this level, selling it again. We get back there again, I want to sell it. So I put 533.03 in it, or probably 533. And then if it gives me a reversal alert within 1, 2, 3, 4, 5, 6, 7, 8, 9 candles, in that case, 10, that reversal alert would have triggered. That reversal alert would have triggered. A reversal alert, those ones where it goes like that, yeah, you wouldn't trigger on 10 because that probably would be about 25 candles. Yeah. So what we're looking for is this type of movement. Hit, bounce. Yeah. If that doesn't happen within 10 candles, it's not happening. If it does that, that's not a bounce. Yeah. That is the sellers can't take control. What's probably going to happen? That or that doesn't, I don't know, but that's invalid. You need to hit it, reverse from it. That's what a support resistance bounce is. You hit it, you reverse. So that's how the feature works. But it is explained in the manual. It's something new that was added. But again, this is what I mean with this thing. Look, I mean, I was asked for that feature. And at the time I was building this, I built it, launched it, and everyone went mad for it. And it was like, wow, this is amazing. And then I said, can it do this? Can it do this? Can it do this? I said, well, I don't do that. But yes, it could do that. And I started building this for everybody else. The problem is everybody else wasn't listening to what I was saying. And they thought they had a better way. So this became everybody's EA. It's all a load of crap, most of the stuff in here. It doesn't work. If it worked, I would use it. It doesn't. So higher time frame moving averages. That is a good strategy, but it's for a stop loss. I don't use stop losses. I don't need that. Higher time frame moving averages won't be in there. Higher time frame reversal alerts won't be in there. Don't use any of it. It's for stop-based strategies. This is why I'm calling it the position trading EA, because it's nothing to do with that. Yeah, so it's a different thing, but simple. Keep it simple. Potentially support resistance bounce plays with the MA filter to follow trends. Yeah. Again, there's no MA. I'm not planning on using a moving average filter. I'm not a trend trader. I'm a mean reversion trader. Moving averages are for trend. I'm not interested. Again, if I put an MA filter in there, it adds 150 lines of code or whatever it adds in, because I don't know how it works, but it adds complexity. Complexity adds speed issues, confusion issues, another load of settings. Yeah, I'm building it for me. Unless someone can show me a conclusive reason why that is a good idea, and I can't show you one why it isn't, I'm not going to put it in. Because it's just going to over-engineer it. I don't want to over-engineer it. I've done that. 2 RSI strategy plus Williams R. That would be amazing, Brian. Yeah. I'm assuming you're joking. Okay, that's a bit clear. I like your wording, Mr. Leary. That's a bit clear. I'm not still sure. I get it a bit. Watch the video. Hopefully the video will make it really clear. This video explains all of my calculations and how I came to all of the conclusions and everything as well. So that might hammer it home a bit more. God, look at this DAX today. 50 SMA overlay on the RSI. Been using it forever. Follows price action really nice. Might worth a look. No. GN. I'm not listening. I wish I hadn't told any of you this now. If I get a load of DMs now with, can it do this? Can it do that? I'm just going to ban you. I won't, but I'm building, everything I do is for me. Yeah. And I use it and people go, oh, I want it. So I put it out there. I then have to become the support agent, which means I sell stuff because I need to spend half of my morning in Telegram. So I get paid for that by people buying stuff. So, but I'm not a developer. I build my products for my use. Throwing a Bollinger Band. Now, that's funny you should say that, AZ. That is actually something I'm looking at as an entry criteria, because I have in the past traded a Bollinger Band strategy very successfully, although it has a stop loss and it has the same problems as every stop loss strategy. It drives you nuts, you get angry, you get cross, you overtrade, it all goes wrong. So, but using a Bollinger Band as an entry mechanism, trigger, rather than a market condition, is good. Yeah, so the market condition of the Bollinger Band being stretched would be usable on a higher time frame. So as an RSI filter, you could use a Bollinger Band higher time frame, but you can also use a Bollinger Band reversal on a lower time frame as an entry criteria, the same as a moving average cross, a reversal alert, or a bearish engulfing, or anything like that. So I am actually looking at introducing Bollinger Band into it as well. I haven't tested it. It's something I'm going to test. So I'm going to use it to test. But I'm actually a fan of Bollinger Band because it's mean reversion. And it is also Bollinger Bands tell you the market is in a stretched condition in the same way as the RSI does. So if you put a Bollinger Band, a standard 2 deviation Bollinger Band on the chart, and then compare it, the entries on that to the RSI extensions, you'll find there's a very similar number of extensions and a very similar number of market condition signals. So you may be joking about that, but I love the Bollinger Bands. And it's really simple. It's simple. It's the beauty of the Bollinger Band is when the market gets outside the Bollinger Band, if it stays outside the Bollinger Band, yeah, you don't do anything, do you? Yeah. But when it closes back inside the Bollinger Band, sellers are in control. What have we done? We've had to push very hard. We've stalled out. The sellers are trying to mean revert the move. Absolutely nothing wrong with it. It's a signal. It's a very good indicator. People use it wrong, though. Like everything. Oh, the RSI, worst indicator in the world. Is it? How comes I produce 6 figures a year out of it? Can't be that bad, can it? You're just trading it wrong. Nothing wrong with the indicator. It's the way that you use the indicator. That's the difference. And the same with the Bollinger Band. Everybody that uses Bollinger Bands, there's a really good strategy out there, which has been back-tested to death by somebody, and he's disappeared. But it's basically a mean reversion with you can use between a 0.75 and a 1.25 R mean reversion on a specific Bollinger Band condition. There's a couple of other conditions in there as well. So there's a signal and a condition, which is a good start because every system in the world needs at least a system and a condition. A signal and a condition. It works really, really well. And it's backtesting, and it's really, really, really easy to backtest as well, the Bollinger Bands. It's simple as hell to backtest. But the problem is that because it uses a stop loss. So the strategy long-term has a beautiful edge, except when you're in this condition, there's 3 stop outs. That don't work. Let's go and find something else. It does work. Here's my Bollinger Band. Here's my signal. Here's my second signal. Here's my third signal. Entry 1, entry 2, entry 3, mean reversion, position, exit, profit. Stop loss, stop loss, stop loss. Nothing wrong with the Bollinger Band. Your strategy's wrong. Your position trading Bollinger Band strategy, brilliant. Doing it wrong. That's good. It's a good thing. GN, sorry, I was looking at GN, wasn't I? Novelty. Yeah, short on that. Third position on Wednesday. And again, look, another example. That moved up 92 pips. ADR is 130. No, that's too close. That's not an example. Ignore me. A-shaped recovery. We need that reversal retest, propulsion, drop. Back into propulsion, retesting the origin of the move, which I don't think was a move. So that's where I'm going with that. But I'm on third because reverted the initial. See that again, look, so close, that RSI extension. It was just literally to the pip. It was on 75. The reversal was as tight as you can get it. So I just got the entry on it. But that's a much better one. How it uses the RSI for entry is also something else I'm looking at. Sometimes these are good, sometimes they're bad. This one was bad, but that would have been first entry. You would have scaled in on second entry on the same day as I did there because that move was more than 3/4 of an ADR before the second reversal. So your average would actually be there, and you would have been out if you hadn't have taken that one. But I did, so I'm not. Would you consider writing a gap scanner? No. Just go buy one. There's gap scanners. There's hundreds of them out there. There's loads of free ones out there. Just go and get one. I haven't done any testing on gap fills. No, because it would be a stop loss strategy, wouldn't it? Not interested. There's one. You don't get gaps in FX very much, so it would need to be for something else, and I don't trade it. So FX, you don't get gaps. You just don't get them anymore. Very, very rare. that they're not filled immediately when they open. It's just, we don't get it in FX anymore. We used to, but the market doesn't gap anymore. If you look at a daily chart, you just won't. It's just not something that really happens. There's one there, look. That was a monthly. That's December. That's the gap for Christmas, isn't it? Christmas, New Year period. There's one there. What's that? Christmas. Other than that, you're not going to find any. Stocks, yes. But I don't trade stocks. But there's lots of gap indicators out there. Gap indicators, dashboards, all sorts of stuff. Google. I've only used Bollinger Bands with an MA filter. But this is the problem. You're using an MA filter. Yeah. And you are saying, because the moving at the Bollinger Band and the price is above that moving average, I'm only going to take Bollinger Band pullbacks. So you are trend trading with a mean reversion indicator. Bollinger Band is designed for mean reversion. You're using it as a trend indicator. Wrong thing to do with it. You're trying to measure pullbacks in a trend. You've got that. It's called a moving average. So you're adding an indicator onto an indicator that tells you the same thing. You might as well stick the RSI on there and wait for an RSI drop. Same thing. How about Ichimoku? Ichimoku Kinko. That's a good word. Ichimoku Kinko. Or Ichimoku Cloud. No. RSI is a really silly indicator. Yeah. I don't find it very silly. I find it very profitable. It pays my mortgage. Each to their own. There's like Thingy did, the guy on YouTube. What's his name? That's got the chess piece as his icon. No Nonsense Trader, No Nonsense Forex. It's on his top 10 indicators to avoid the RSI. You know, he's back tested it. It's useless. Why is it useless? Because sometimes it gets extended and it doesn't work. Really? An indicator sometimes doesn't work? Oh, shit. Didn't know that. This is only reason. Sometimes it doesn't work. So basically what he's done is he's picked 10 indicators at random and gone, sometimes these don't work. Don't use any of these. Use a combination of them. Why don't you make a really complicated strategy with 5 variations of the same indicator that all give you a signal at the same time, and then take that one? That's a good way to put a strategy together. I struggled with multiple position in Bollinger Bands, but ADR spacing would fix that problem. Scaling into the move. Scaling into the trend. Yeah, don't forget, we don't know when a trend is going to start. We don't know when a trend is going to end. All you can do is, once you're on the train, is get on the train until the train changes direction. Look at the pound New Zealand. Now, when it gets down to there, I'll get off. I have no idea. I had no idea it was going to go up from there. When I got in there, or the EA got in there, no idea. EA got in there, no idea it's going up. You've got no idea. When you've got a Bollinger Band on the chart and it gets above there, you've no idea if you should take the next Bollinger Band or you should space out 75 ADR away. You've no idea what to do. If you knew that, you'd do it. That's the whole point of trading. You don't know what to do. You're not in control. So you just get in, wait. When this thing goes up, it goes down. It goes down, it goes up. When it goes down, it goes up. When it goes up, it goes down. It goes up, it goes down. It goes up, it goes down. It goes up. It's coming down. That's what it does. You can't time it. And it doesn't matter what indicator you use. Oh, you shouldn't use the 2 standard deviation Bollinger Band. You should use the 2.5. Why? Because it gives you a different signal. Yeah, I know. Why? Why is that better than that? Why is that deviation not as good as that deviation? Well, it doesn't give you as many false signals. Yeah, but that one doesn't give you any signals. It gives you one. And what's the odds of that signal being right? 50-50. All indicators do the same thing. They tell you what's happened. It's got nothing to do with it, the future, at all. Any strategy on any indicator is going to fail at some point. It's how you manage the position, the trade, not the indicator. So it doesn't matter if I put 10 of the indicators you want in this EA that I build, they're all going to do the same thing. They're going to get you into the market. None of them are going to be better than any other one. That day, you should have done Ichimoku. That day, you should have used RSI. That day, it was the Bollinger Band. That day, it was Ichimoku again. Hang on a minute, the moving average hasn't triggered for ages. Let's use that. Oh, that got me in and now I'm in drawdown. Oh, maybe I should have used the Ichimoku. Doesn't matter. All irrelevant. Have you ever looked at ADR grid entries? Yes. No. Grid trading is awful. Right. Let's use this as an example. Was this 175 ADR? 2349. Yes, that was 175 ADR, pound New Zealand on Wednesday. Okay. So 130. Well, that's convenient. Pretty much my break even, right? So first entry, short. Yeah. Second pending order, third pending order, fourth pending order, fifth pending order, sixth pending order. Why on earth would you get in? Because the market is going up over and over and over again. I got in there, right? And I get in roughly about there, which is another 75% of ADR away with my second entry when the market goes short. What am I in? 2 positions. What are you in? 1, 2, 3, 4, 5. What's your drawdown? 5 times bigger than mine. Because why you used a grid? If a price shoots up 200% ADR on news and you're a grid trader, you are just getting into drawdown. And then if it goes sideways and decides to rally, you're dead. You've blown your account. It doesn't work. I've tested it many times. When I developed ADR strategy, the first thing I did was go, as soon as I put the extensions on the chart, I was like, look at these odds, right? So if I get in here, there's only a 23% chance it goes further than there. So if I get in there and there, there's only a 12% chance it goes higher than that. Yeah. The number of times it does that isn't often without it doing that within 2 days. But when it does, it blows your account because all you're doing is entering a massive position on a buy signal. Why are they doing that? Because the market's going up. You're just basically going like that. You're cutting your arm and eventually you go, that's it, you're dead. That's basically what you're doing with the grid, which is why it doesn't work, which is why we wait for a signal that the guys that we want, market reversal alert, sellers, are on our side. There's no point in getting in if the market does this and the first reversal alert you get is there, which shows you that there's actually enough selling pressure to come down. There's no point in getting in any of this because you're not on the side of the people that you want on your side, the sellers. If you grid trade, all you're doing is you're pending ordering at a specific distance. So instead of, if this does 200 ADR, instead of having 1 position there, 1 position there, you've got 5 positions. In the back tester, I've actually got an EA. I wonder if it's in here. That does grid trading on ADR. I built it. No, it's not in here. But I built the EA to first. When I built the indicator, I built the EA to grid trade it because it looked brilliant, and the P&L looks great. Does this? It just goes like that. It's amazing, and then all of a sudden it goes because you get a move like this. You're dead. You're just dead. On that move alone, you're in 25% of drawdown on your account. By the time you're up here, you've blown the account. That's taken 2 weeks. You're dead. It just doesn't work. Wish it did. It'd be a lovely, easy strategy, wouldn't it? But this is why there's a forum on Forex Factory. There's a thread by a guy called David, that uses pivot points, and he developed a grid trading pivot point strategy. Looked great for a while, and then all of a sudden you realize when the market regime changes and that interest rate changes because it wasn't expected, it goes up 0.25, they weren't expecting it, and that spike goes like that, you've gone through 3 pivots, you're dead, because the next 3 pivots are going to fail, the next 3 pivots are going to fail, and as you've grid traded it, you just go into massive loss. He was using a stop loss on it, but it's just stop after stop after stop after stop after stop. If you use that grid for position trading, you just go into drawdown after drawdown after drawdown after drawdown after drawdown. It's the same thing. Doesn't matter whether you use a stop or you position trade it. You will get to a point, same as martingale, looks great for a period of time. You can't sustain it because the market can go further and faster and harder and longer than your account balance will ever be able to manage. Don't mind me, it's Friday, Brian just said, yeah. Ichimoku, they make cream for that. Ichimoku. I'm not going there. Bollinger Bands and support or resistance are also on his 10 worst indicators, are they? I can't remember the video. I haven't watched it for ages, but yeah. Support and resistance. How can you put, it's not even an indicator. The level. I'm going to ask another dumb question. Pretty sure I've asked this before. It is a dumb question. I've said it many times, AZ. There are no stupid questions until you ask them twice. If you ask them twice, it's stupid because I've already answered it. I'm going to go for your question now. Pretty sure I've asked this before. But if we're normally sitting in 5 to 15% of drawdown, if we expect the exact opposite, why would we be sitting in 5 to 15% profit? Why wouldn't we be sitting in 5 to 15% profit consistently? We're not expecting the exact opposite, are we? We're expecting a pullback. I wasn't expecting this entry here to return to here. I was expecting it to pull back. So to go in 5% of drawdown, I mean, you wouldn't go in 5%, but if that went into 2% of drawdown or 1% of drawdown, that would be break even. That would be 1% of profit. Yeah. So for you to get into that, you've got to hold the position, haven't you? If you do the exact opposite, because you don't do the exact opposite, do you? Do it. Do it. Try it. You're missing one fundamental point. Banking profit. When you look at your P&L in drawdown, what are we doing? Waiting for it to go into profit. When it goes into profit, what do? Bank it. I'm in $87 there of profit. I'm very strongly considering banking it. So what you're telling me, I should wait until that gets into 1.5% because it went into 1.5% of drawdown. This doesn't work that way, does it? It just doesn't work that way. Your job is to make money, is to bank profit. Right? What don't you have in drawdown? The ability to bank profit. Right? If you got in and it went that way, you don't know it's going there. So you will bank it there because you've no idea if it's going to do that. Fear, greed, the ability to bank, go green, pay the bills. That will always override your ability to hold it. You go into drawdown because you have no choice. If you knew it was going into drawdown, you wouldn't have gone into the trade. If you go long there and it gets to there, you've no idea it's going there, so you won't hold it that long, will you? Because you'll be going, holy crap, that's the car payment. But if it goes 2 car payments into drawdown, you can't do anything about it. You're waiting for it to get back to bank the electricity bill. You can't, it doesn't work that way. This thing, there's this thing that I found years ago, and it was an EA basically, and it was a copy trader EA, and I think there's still out there. I think FX Blue might even do it. But basically, what it was you go and find a signal service that's crap, right? And basically, you put this EA on your chart and it copies that signal, but it just reverses it. If that signal service is making a P&L go like that, surely if you just did the opposite to it, your P&L would go like that. No, because the stop loss and the TP, risk reward, are reversed. So what you would be doing is having a negative R. If you turn the stop loss into a TP and the TP into a stop loss, you don't get the same result. If you go, all right, then what we'll do is we'll use the same stop loss distance and TP distance, but we'll invert them. Yeah, because he gets it wrong. But what happens is it doesn't get to the TP because he would have been stopped out and then it comes back. Doesn't work. You cannot invert a strategy. Try it. Find a back test, right? And basically try and do the you need a signal go the other way, but try it. It just doesn't work. It would be lovely, wouldn't it, if we were sitting in 15% of profit all the time? But then again, what would you do when you're in 15% of profit consistently? You're not going to bank it, are you? It's just going to turn into a drawdown at some point. The Dirty Dozen, that's the video. Yeah, Evans, the Dirty Dozen video. It's worth a watch, but you will go down a rabbit hole if you go and watch it, and also you'll be using a stop loss and risk reward, and you'll take a massive step back. So don't go and watch it. The profit comes from staging back the positions. If you did the exact opposite in hopes of continuation with the 1 or 2 positions without staging back, you'd be lucky to bank 5% at the end of the month. Yeah, it just doesn't work that way. The other thing I've not considered is the fact that we enter multiple positions, which increases our size. If you flip that, you would have to somehow add to it. Yeah. But you wouldn't. And this is my problem with people that have these strategies where they add. There's one by Daniel Martin who runs CTI. And he has a strategy where you use a strategy called Satguru, which is adding to positions, basically using percentage of profit of the position. Overly complicated way of saying I'm going to gamble on more movement rather than take the profit and pay for bills. But that is the problem with it. If you get into this reverse alert here and it pushes down to there and your TP is here and it pulls back to here and you push back down and you add another position there, when it gets to your TP, if it goes like that, you don't make any money. You've got to take the money. You add to a position, it's fine. But when you add to a position, you're doing the reverse to what we do in position trading. You are moving your average closer to price. As position traders, that's what we want. We want this line as close to price as we can so we can profit from it. When you go short here, and then it comes down to here and you add another position here, you've moved your entry price there. So now, as soon as you get a little pullback, you panic because you're back at break even. If you hadn't have done that, you could have gone there. I'm just going to get out. It's half as much as I could have made on it, but I've made a profit. Now you've made a break even because you added to the position. The only time it ever works is if you are lucky enough to catch a trend. A trend trader, what percentage of the time does the market trend? So what's your strike rate? Losses. Adding to positions will work 20% of the time. 80% of the time you'll lose. 8 trades in a row trying to do that, you're off. You can't hack it. Psychology is just that's the bit. Everything that everybody teaches you works on paper. Compounding works on paper. Everything, adding to positions, fantastic thing to do 20% of the time. But it all works on paper. But you can't execute any of this because the brain doesn't let you. The brain sees money. That $80 is now a $95. I'm looking at it going, I need to bank it. The thing that's stopping me banking it is I have a little rule where I want 0.25%. So I'm not. And also I think it's coming down. But and the euro's coming down as well. But you know, it's all psychological. And this is where the stop loss thing fixes your problem, doesn't it? Adding into a position, if I go short again now, it's a great idea because I've got room to move. But what's it going to do to my average price if I go short with 0.15 here? My average comes back up to here. So when the market structure on this does this, I'm back at break even. I'm panicking. I don't want to go into loss. I don't want to go into drawdown. So I'll close it. I've just lost that $95 because I got greedy. But again, sometimes it will work and people will tell you, it's a fantastic thing to do. I do. I think it's a brilliant thing to do. Opening range breakout EA has a scale into positions function where it automatically scales into the trades that start to work. When they work, they milk it. You can pass an evaluation in one day, and I did it. Do you remember? I don't know if you remember, but it was on 8-cap. So I used the ORB EA on a break, and I had the scaling feature turned on, and it basically scaled in, 8%. One trade, one session, target. 3 scalings. Job done. Then I did in the afternoon exactly the same thing on the New York session. 8%. Passed. That evening I had a 100K funded account. I took one trade. I added to it. No skill, luck. I caught a trend. Lucky that day both markets trended. The Frankfurt session trended. The US session trended. That won't work. So I now have a funded account. The next day I try that. Break even. Loss, break even. Down 2%. It's not going to work. Long term, it will possibly because the edge is there, but you've got to let it run. What can't you do? Hold trades. Brain, you can't reprogram this thing. You're a human being. Plus, for those in the States, you've got to deal with Mr. FIFO. Yeah. You can add size though, can't you, Brian? FIFO doesn't mean you can't add size. Like in futures, you can add more size. But with first in, first out, when prices moved up, obviously you're going to take the last position off, aren't you? But they do that a lot in futures. They scale in futures a lot. But you're trading ticks, I mean, this move here over the last 3 hours, if you were trading on the futures market with that, you're talking tens of thousands, aren't you? If you've scaled into that and it's worked. You look at it on a low time frame, you haven't had no reason whatsoever to get out of that thing. Yeah, got in, reversal. Inside bar. Bullish engulfing, might have got out on that, but you would have added on that break. Gone sideways on the inside bar, shorted that break. You're down here now. There's one signal to get out. You'd be in that. And that's an account. That is a pass on an evaluation. One reversal alert, 3 scalings, you're done. 1% risk, obviously. Another 1%, another 1%. By the time we get down to there, that position is in 3% profit. That one is in 2% profit. That one is in 1% profit. 3, 5, 6. Target 8. Done. Easy. Really easy to pass evaluations, but you can't do that every day because the market doesn't let you. It's not that lucky, is it? Pound New Zealand, ADR. Right, I need to start looking at these exits. Not that one. $200 there. So we're at ADR. I'm going to take that one off. And let's get out half of that. And obviously, if it pushes up, add it back on again. If it comes down to target, profit. New Zealand US is coming into profit as well. Plenty of room within ADR. Look. Propulsion moves, loads of room up there today. This is what I was, if you're still in here, Mr. Lunary, yeah, this is a use of ADR. Yeah. I've got my target at the top of that propulsion gap. Is it achievable? Yes, leave it. It's achievable target, isn't it? Easy. It's within ADR. There's a 58% chance it's going to get up to there. There's a 42% chance it's going to do that. It's going to hit that high. If it does that, I want to be out before it hits that high because it's probably going to bounce at resistance. So that's a prime use of ADR. How far can we go today? Normally, if it's a normal day. If it's not a normal day, it will do 200 ADR. In a normal day, if we are trading normally and there's nothing big news-wise, there's nothing unexpected happening in the world, normal day, we will just go up and down within ADR, 125% of ADR, something like that. So if I'm going to go long here, realistically, where can I get to? Somewhere up here. If I target that, I'm an idiot. As long as I'm happy to target that and realize it's going to take me 2 to 3 days to get there, that's fine. Nothing wrong with that either. But don't expect to scalp on the 5-minute time frame and be up there this afternoon. Not going to happen. Unless the news drives it there. Yeah, we've got Michigan figures. If Michigan figures come out negative 700 and they were meant to be plus 600, yes, we'll be up there. But it's not going to happen, is it? Let's see if there's anything over here as well. So banked a bit today. 1 and a bit percent. Right. Nothing's happening on this still. DAX has made a new low, which is great. We're on our way. FTSE's just a massive hedge. So we'll look at this afternoon. Really have no idea where we're going. So we'll see. Plus, for those of us in add size, but the first position comes off, then so forth. Yeah, when you TP, yeah. That's the difference. And this is where with people like Apex that have this trailing drawdown that goes with the high of the session sort of thing. When you get in there and there and there and there, and then you close a position out there, that one closes out. Your average was there. Your average suddenly jumps to there. And then you take that one off and your average suddenly jumps up to there. And yes, you've banked a nice amount of money. You might be up 2K, but if you've got a $1,000 drawdown and you wait for a 50% pullback on that leg and then go up, what you've actually done is got into $1,000 of drawdown. You've banked 2,000, but you've gone into 1,000. You've hit your drawdown. You're out. They stop your account and that's it. You failed your evaluation. But I just made 2K. Yeah, but you drew down by $1,000. But I got that trade right. Yeah, sorry, that's the rules. This is where they get you. It's just the way futures works, which is why futures is so bloody hard to scale into and actually make money. You have to get out the whole thing and go, take it. You don't want to because you're on a roll. The days in futures, the happiest days in futures are these. You go short, pulls back, you go short, pulls back, you go short, pulls back, and you're like, this has got to end. Oh, it's got to end. Oh my God, there's the mortgage for the next quarter. This has got to end. You get days like that in futures, and that's what you have to wait for, them. When they come, you kill it, and it's the best day in the world, isn't it? And then you have to sit through this probably 60% of the time, don't you, going, oh God, I hope this is double top. I might make enough for a quarter of a mortgage payment today. You just got to, this is what pays you, these big days. You have to wait for them. And you've got to scale into those properly. And you will never want to get out of them because on those days when they are doing 150 ADR, you've got to sit there and shut your eyes. I go off and make lots of coffee. I go and walk the dog, do something, get away from the screen because I don't want to get out of the position. Fun. It's much more of a game, futures, I think, than CFDs. Well, position trading, because it is a game. It's like high-risk gambling, but very lucrative when you get it right. But use a firm that doesn't have a trailing stop, trailing drawdown. Take Profit Trader, the main ones I think they're the best in the market at the moment, but I'm not trading them anymore at the moment. So, right, I'm going to go because I've got stuff to do. I want to get on with things, and it's 10 o'clock. I'll be back this afternoon at 2:20 for the New York session and 7:50 tomorrow for Frankfurt. So far, nothing going on today. FTSE's coming down. That pound is still holding, look. I'm impressed. So obviously we're selling stocks off for some reason. So I will obviously keep an eye on these, but targets aren't changed on this. I'm going to go for this low to the downside, ADR to the downside, and just shy of ADR to the upside. If I see an obvious bounce off of yesterday's high, I'll take it potentially. So just down here, this propulsion move, which is what we had out of that news, I think we'll probably get some buyers out of that. So if it comes through it and mucks about, possibly not. But I will be watching the yesterday's high level, which is basically here. But I'd rather go out down here because the market will be stretched and it will want naturally to take profit on this down move. So we'll see if we can get down there. At the moment, it's going pretty well. And the DAX is stuck. So I'm only short. So I need this down basically 40 points, basically. Quarter of an ADR. Not going anywhere. The FTSE needs to raise its left hand. It's Head and Shoulders. That makes me worry even more because 90% of Head and Shoulders fail. Excuse me. If that's what you meant, Brian. Right, I'll be off until this afternoon. Anything you need, let me know in Telegram. Otherwise, I will see you guys this afternoon. If not, tomorrow morning, 7:50. Have a good morning.